Good morning. Thank you for joining us today for the multifamily market update presented by the Multifamily Investment Advisors here at Keller Williams Commercial. My name is Travis Montgomery. I'm the Director of Marketing for the team. Wanted to start off this webinar by passing the ball over to Vince Ewing to actually go over some updates in regards to what investors are actually seeing in the market when it comes to Chicagoland assets.
I appreciate that, Travis. I'll be happy to share. Going into this Q4 2021, we're having an influx of investors wanting to take advantage of multifamily opportunities that are coming on board. We're seeing the recovery from the pandemic pushing along just multifamily sales have increased. We've seen rents increase actually as far as apartment rentals by 13.8% since January. That's actually a exponentially higher rate than we usually see between January and September, with the normal rate being at 3.6%. So we're definitely seeing rents get back to that strong market value that we usually see in the Chicago market. Demand for new luxury apartments is higher than ever, according to Realtor Magazine, in Chicago's downtown area. And you're seeing the developments that are sprouting up, new high-rise apartment buildings sprouting up everywhere we look. Construction projects are starting back up. We're seeing your average two-bedroom in Chicago go for $1,423. And that's about $200 higher than the national average. That's causing the coastal elements of investment community wanting to influx and inject some capital into Chicago because there's more meat on the bone, so to speak, for every dollar they invest. We're still seeing, the normal pace we see with Los Angeles averaging $500,000 per sale property. $1 million average sale price for property in New York. Chicago, not that much of a population difference. A little bit lower on the scale, obviously, but we're still number 3 in the metro area. Coming in over $350,000 per sale price. So only 50% of the population being renters here, and those renters on average paying less than 20% of their income for rent. Again, it's making out of our phones bring off the here multifamily investment advisors. We're happy to share these opportunities that have been coming out.
Thanks for sharing those updates, Vince. And I'm glad you mentioned the recent developments when it comes to high rises. That's a perfect segue to actually pass the ball over to Jason York to give us a few updates regarding some recent developments here in Chicago.
Absolutely. Thanks, Travis. So really brief, wanted to touch base on a development that recently got some zoning approval in the Goose Island area. The developer Ani Group is proposing a 5-tower development for the Goose Island area, and the project is probably going to take about 10 years to completely be built and finished. So it's going to be built in phases, but this development will include about 2,600 residential units, as well as about 300 hotel rooms, some commercial and retail space, and also having about 500 units for affordable living as well. So this is going to be a really exciting development for us to kind of keep our eye on, especially as the first phase starts to come to life here. And yeah, that's pretty much what I have today. This is going to be in the Goose Island area again. The address is 901 North Halsted. So we should keep our eye on this one. Thanks, Travis.
Thanks, Jason, for going over that update. Now I want to pass the ball over to our Director of Investor Relations, Kelly Rich, just to share a few priority listings that we have in our inventory here at the Multifamily Investment Advisors.
Sure, Travis. Thanks so much. Yeah, I just wanted to let you all know of a couple of investment opportunities that we have available with the team. The first one I wanted to talk about this afternoon, it's an opportunity for you to pick up 22 units in Calumet Park. Calumet Park is an area, it's located about 25 minutes south of downtown Chicago. This package is 2 blocks from the I-57 expressway, very convenient location. It's comprised of 2 buildings on the same block, and it offers an 8.3 blended cap rate. So give us a call if you have any interest in that opportunity. That's a great asset to pick up. We also want to talk about an opportunity that we have in Hyde Park. So this is located at 5228 South Blackstone. It's in downtown Hyde Park. It's an opportunity to pick up a mixed-use building in the downtown Hyde Park area. It's 40-unit building. It has strong long-term retail tenants. It includes a long-term national tenant in Boston Market. That's another opportunity to pick up. And lastly, not least though, I want to talk to you about a portfolio that we have in Brainerd, West Chatham area. This one you can pick up 114 units on the south side in Brainerd and Chatham. It is a low per unit price of less than $60,000 per unit. These combined portfolios give you an opportunity to pick up a critical mass of assets within a few miles of each other with great cash flow from day one. As always, for more information on these opportunities, reach out to us at www.chicagomultifamilyinvestments.com. You can also reach us at investment@kwcommercial.com. And lastly, by phone at 312-863-8990. I will be posting all of these contact methods in the chat. Thanks so much, Travis. Take it over.
Thanks for sharing that information, Kelly. Wanted to go over an upcoming event with the Southside Community Investors Association that'll actually happen on this Thursday, September 23rd from 5:30 p.m. to 7:30 p.m. That'll be hosted by our Executive Director, Tony Hardy. They're going to be going over the new Chicago TIF program, where it's going to be assisting multifamily investors with up to 50% funding for your acquisition/rehab or renovation project, as well as updates on the Just Cause Eviction Ordinance and updates on the RLTO as well as the RTLO. So if you would like more information on that, please feel free to reach out to us at investment@kwcommercial.com or give us a call at 312-863-8990, as Kelly mentioned, and we'll gladly share that additional information with you all. Thanks for tuning in this Monday, and we look forward to seeing you next Monday.